People are not. You want to always want to skate to where the puck is going, Scott.
Yeah,
and where the puck is going is these areas.
If the puck is going to a softer portion of the ice because the economy is obviously weakening by virtue of the data, do you really want to skate there at the risk of falling through?
Yes, I do, because remember, stocks lead earnings, which lead the economy. The stock market, if and when we see the softness in the economy, Scott, the Fed's going to cut rates. Karen was amazing when she talked about, and Bryn talked about the Fed's going to be late. Everybody knows the Fed's going to be late. The Fed's going to overshoot. We know that. Scott, what's the market going to do if and when the Fed cuts rates? Come on. The market's going to rally the second half of the year. To be talking about the market peaking in the first quarter makes no sense. Are we going to be choppy here?
What if we're in a recession? What if we're in a recession?
What if we've already in the recession? The market was down 26% peak to trough. The market's already told you we're going to have some sort of recession. It could have already happened. Again, stocks lead earnings, which lead the economy. By the time we're in a recession,
consumer recession hasn't happened. A consumer recession, which would arguably make it a little deeper if the consumer rolls over to any great degree, then you could have a problem with your thesis, no?
No, because the last consumer recession we had, the true consumer recession we had was in the 80s. We had a bit of a consumer recession in 1990-91, but we came back very fast. By the time that the market, we examined that we're in a recession, the market's up on average 10 to 15%, Scott. So again, you have to be careful with, we're in a recession, the market's going to go down, or we're going to a recession. The stock market's already told you we either are in a recession or this notion of a rolling recession, which everybody likes to talk about. But the stock market's already discounted that we've either already had a recession or we're in a recession.
So you're bullish because you think the Fed's going to cut rates?
No, I'm bullish because I think, number one, people are way too bearish. Number two, a lot of people are miscalculating what's going on in the market. The stock market went up in January because everyone was buying the oversold stuff. Then all of a sudden people got worried in the banks and they bought liquidity. Oh, by the way, what's liquidity? The largest stocks in the market are the tech stock.
So your base case is that earnings don't come down anymore from where they already have come down to?
No, I think earnings might go down a little bit more the next quarter or so, but actually we are very, very confident. We're in this squishy part of the market in April where I think this is where you roll up your sleeves, and when the market gives you an opportunity to bottom fish, that's what you should be doing. You've said on the show here that you have many technology companies that are showing negative year-over-year growth. And if the S&P 500, what Scott continues to be worried about in terms of earnings are going to go to zero or whatever.
Did I say that?
If you have negative earnings growth.
Did I say that? But I didn't say that.
No, I'm just calling you out because you're so negative.
I didn't say anything.
Scott.
I didn't say anything.
But you're so
I asked you the questions.
Earnings. But Scott, you're so negative on earnings all the time. What you have to understand is that stability of earnings are going to be important.
They come down though, right? They've come down though, right?
Of course they come down, but they're not going to be double-digit negative, okay? And all the companies in the market are not going to be losing money.
I never said they were going to be. I never said they were going to be.
Yeah, but if financials are still going to give you double-digit earnings growth and attractive multiples, and everyone hates those names, don't you want to be there?
I mean, you'd want to be there just because everybody hates them? I would think that people would want to be there.
No.
I'm not the one who had to drop my price target on the S&P last year, am I?